Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, October 24th. Well, on Friday and pretty much all of last week, we've just been gyrating in a really tight range, creating a lot of doji candles, which are indecision candles on the daily chart of the SPY. I'll get in that chart in a moment. But what is that telling us, right? That's telling us that markets are just not going to sell off. We're going to need something really pretty big. There's a lot of bad news out there. I mean, a lot. Deutsche Bank. Credit Suisse out in Europe, all of the Italian banks, a lot of them anyway, and especially the Deutsche Bank situation. I mean, they're pretty much done. But the German government is, and obviously pretty much all the central banks in the world are not going to let that happen, especially putting in so much money into their markets as well as our market. So they're just fighting it, and they're just keeping this thing elevated until the presidential election is done and completed, which is going to be in another couple of weeks. So I pretty much think we're going to have no volatility. We have volatility just totally collapsing. But that's going to change. I'll get into that to you in the charts. But just very, very quiet, subdued trading. And every time the market gets to a critical level, you see the futures just boom, immediately get bid up, and you could just see how manipulated these markets are, and that's what we're dealing with right now. So if you are an active day trader, you'll know as a professional that you're not going to be so active in a market that's really not giving us pretty much anything, and other than range-bound trading. So we would gap down, and we pretty much would stay that way, create a whole new range, or like we did for the last 4 months, we'd gap up. And stay range bound pretty much most of the month, gap up again and range bound, and I show that to you again in the daily chart. So we have a lot of deterioration in our trading model. The TMT trading model is on a sell signal, continues to do so for the last month. But we have no movement. I mean, we have very little movement to the downside. So building positions at these areas are just really not the right thing to do, unless, of course, if you have a big book or I would say a big account. So let's get right to it. We have the NYUD advanced decline with volume. Love this indicator as one of our trading model. And you can see here, we're below zero. We continually break below zero. And we're making lower lows and lower highs while the markets are really just kind of holding in here. You can see that. This picture here. So we break down and then we get back up again and we just make lower lows and lower highs until the big break. And that is something that I'm seeing, and that I think it's going to occur. Here's the volatility VIX. We just continually have volatility collapsing. That is not a good sign. It is a contrarian indicator, so it does the opposite. But I do think that a lot of these short-term traders that are short volatility, that keep pressing this thing lower, what's going to happen is you're going to have that one event that's going to make the VIX explode higher. And what's going to happen, all of these shorts that are down here short, they're going to have to cover way back up here, and they're just going to destroy their accounts. And what do I mean by that? What I mean by is that right now, the VIX is the most short in history of this instrument that's been created, okay? It's never been so short before, and it continues to be, it continues to work for the shorts at the moment. But you're going to have one day that's not going to work. It's like selling calls or selling puts naked. You're going to make a lot of money, and one day you're going to lose it all. So just be careful. If you guys are doing it, if anybody's doing it, I would be very, very careful, because that could happen at any given moment. Let's roll right into the U.S. dollar, and I think that this is going to be something that you really need to watch. Now, I've been saying, and those of you who've been following me, here, I said, don't count the dollar out, and here, don't count the dollar out. Because why? It is a safe haven trade, and every market participant around the world is going to flock to the U.S. dollar. Despite that, we have deterioration, as a whole in the markets itself, with GDP and all of the trillions of dollars that the Fed's been pumping into and devaluing our dollar, or at least trying to. It's just not happening. You can see here, higher highs, higher lows, beautiful symmetrical triangle. We took out 97.50, our first area of resistance here, which is now support. We took the other one out at 98.50, which we had some big areas of support here. Now this here is validate. This validates this area of support, and I love to see this pop out. What's going to happen is right now, you don't have a lot of market participants really paying attention to the dollar at the moment. So gold took a little bit of a tumble. We're going to get into that in a moment. But we have crude oil ripping to the upside, and I want to show you crude oil. this is the commitment of trader reports in a graph formation, okay, in a bar chart. And you can see here right now the producers are heavily shorted at 50, 51 and a half, while the speculators are continually buying long here, looking for a bigger move. I'm going to go with the producers. Now, this is not a timing tool. This can go on for weeks and weeks on end, but you have to be careful. If the producers that are producing oil are hedging what they're taking out of the ground, okay, you have to be very, very careful. Okay, now, when you have oil, let's say at $25, $30 a barrel, that's when you want to follow the speculators, because they're trending. That's what they want to do, because the producers are always short. However, when you get to a low like you have here, this is where you want to start looking for the trend. Okay, you can see that they're short very little every week. They increase their short, but nothing big. But when you get to a point where you have a move, and let me show you crude oil, like this, an explosive move, all based on an OPEC meeting, which usually generally falls apart or nobody really agrees to it. You have to really be careful here. And if you took it on this, great. That's fantastic. I would be tightening up stops, or I would be literally saying my stop below 49.60 or 49.50 here, or 52.22. If you're short, define your risk accordingly, what side you're on, if you're long and or short, okay? But you can see here our indicators, our momentum indicators are starting to roll over. So this is a big area of resistance, okay? And we had a big move. If we did not have a big move and we were just making higher highs and higher lows, chopping around an area while we started base at the upper end of the range, then I'd say we have a better chance of a breakout. Even if we went up to $52, $54, I do think that that's going to be pretty much capping the move between now and the end of the year. And seasonality, crude oil really has weakness going into next year. Okay, so you want to be careful with that. And also, we're having talks yesterday. There were talks of OPEC ministers and ex-OPEC ministers saying that the chances are likely zero. Iran increased their output by double. So just be careful, guys, if you're trading oil here. I think oil will be a good setup back, believe it or not, down into here, right around the 46 area. If the talks break down and meetings break down, I'm going to tell you, I hate to say it, you're going to see oil way back down here to $41 to $43. And that's something that you might want to reconsider to look to buy it, okay? But not until oil really gets a good move to the downside. All right, let's take a look at gold. And again, everything reflects in dollars, right? So if the dollar is strong, oil and gold, eventually oil is going to catch up and pay attention to what the dollar is doing. All right, so quickly we go into this. Here's a weekly chart of gold. 1234 is that 50-day moving average. You got the 200 right now, capping that, fell back below it. Why doesn't it get to 1234? I would suspect it does, guys. It usually does. It takes out all the weak hands. One more big flush, and then we would start looking to buy. All right, next is going to be gold daily. And to me, this is just a bear flag here. You can see that. This is just a quick, small bear flag. All right, and there you go. So to me, I think one more move down into the 12. I would say that 50% retracement, 1212 to 1230. It's a little bit of a wide range, but that's the way gold trades. So I like the fact that I like buying gold down here. And if you could see, let me just move this up a little bit. You could see that our momentum indicators are starting to base, and that's something I'd like to see. So MACD is starting to turn positive. RSI still below 50. But if we can get one more move lower and the indicators continue to be positive, that's going to be positive divergence, and that's something I'm going to be looking to get involved in, okay? Get right into the GDX. You can see that here. Again, RSI, MACD starting to move nicely, okay? And that's going to be a gap fill area here for me. I'm looking for that gap fill at 25.80, 26, and fail one more time, and then hit that area between 18 and 19. Get a couple of days of some scary selling, and that's when we're going to start looking for base building and starting to look to really get long GLD and GDX. All right, same thing here with the GLD. You could see that here. You could see how the gap down area, gold is much weaker than GDX is, okay? So that's something that we're going to be paying attention to in the coming weeks. Spiders go right into the index. Big bearish rising wedge. You could see that. Nothing good about this chart at all, guys. Nothing good about it. They just continue. They meaning the powers that be, the Federal Reserve, the Fed itself in general, the government, holding on to this market gains until the election. And you know what? I'm not a conspiracy theorist, but I got to tell you, it's out there. You could see it. You could clearly see when if you're watching price all day, you'll know what I'm talking about. But anyway, 210 is still going to be the area where I'm looking for that first target for this downside move from up here, and you could see it. July's, I think, percentage gain was 3.5%, and you know why? It was only these 4 days here was up 3.5%. August was dead, and August, September were dead months, and October seems to be doing nothing at all. So really nothing going on here for almost 4 months, which is dismal for active traders. Next is going to be the Spider 60-minute. Just want to show you. You see, we break down, we break up, we go into ranges, we break back down again, we go into new ranges. So we do have our indicators moving up, RSI, MACD on a 60-minute chart. All right, 212.50 needs to break, 214.50 needs to break back to the upside. Those are the two big numbers that I'm looking for today's trade. All right, transport's just doing really nothing here, hovering around the range. But pay attention to them. You can see a little deterioration here in our MACD and RSI. So we want to watch and watch closely to see what that does for maybe some clues that we might have some further downside probing. IWM, again, doing absolutely nothing for 7-8 trading days. Inside days for 7 trading days. 120 is going to have to break. Once we break 120, then we'll start looking for some downside targets. And last is going to be the Qs. Qs is holding in here nicely. Again, because you have Netflix, you have Amazon. Apple reports today after the close, so we'll be interested to see what happens and what Apple does after the close. All right, guys, a little bit long video. I apologize, but something I really want to get out to you guys, usually on a Monday. Have a great day. We'll see you tomorrow.